You know, in so many small businesses, there's money just quietly leaking out every single month. It's not fraud, it's not a lack of sales, it's something way more subtle. It's cash that's been silently frozen. And today, we're going to show you how to thaw it out using a tool that's already on your computer. If you're in retail, you know this one hits home. Dead stock equals dead cash. Every single product that's been sitting on your shelf for months isn't just taking up space. It's your money just sitting there not doing a thing for you. It is effectively dead cash. And hey, this isn't just a retail thing. If you run a service or an education business, every empty seat in a class, every unscheduled hour for an instructor you're paying, well, that's pure profit you can never get back. It's the same exact headache, just wearing a different hat. All right, so how do you even spot these leaks in the first place? Well, the first step is to get one thing straight. This isn't about how hard your team is working. It's a planning problem. And the good news is it has very clear, very measurable symptoms. Look, let's be really clear about this. This is not about working harder. You're probably already working your tail off. The issue isn't sweat, it's strategy. It's what happens when you order new stock based on a gut feeling, or schedule classes just because that's how you did it last year. That's blind planning, and it's silently eating away at your cash flow. And get this, the scale of the problem, it's absolutely staggering. In a typical retail business, a whopping 20 to 30% of all their products haven't sold a single unit in over 90 days. Just let that sink in. Up to a third of your inventory might as well be a fancy paperweight holding down your cash. Okay, another number to watch is inventory turnover. A healthy business is constantly moving its stock. But for so many small businesses, that turnover rate is less than 4 times a year. What that's really telling you is that there's a huge inefficiency in turning your inventory back into cash that you can actually spend. And it's the same story over in education. You often see class fill rates dipping below 70%. That 30% gap, that's not just lost sales. That's pure profit just vanishing, especially when your staffing costs are fixed. Okay, so we've diagnosed the problem. So what's the fix? Well, it might surprise you, but it doesn't involve some fancy, expensive software or crazy algorithms. In fact, a lot of what gets hyped up as AI is really just structured, disciplined thinking that you apply over and over again. Let's just demystify this whole AI thing for a second. When we talk about AI forecasting for small and medium businesses, we're not talking about some complicated black box that nobody understands. We're talking about applying simple, logical rules to the sales data you already have, using tools like Excel or Google Sheets that you already own. So here's the bottom line, and this is crucial. This approach is incredibly low risk and super high reward. You don't need to go out and hire a team of data scientists. You don't need to invest in some new complicated system. You can start getting results with what you already have, like right now. You know, this whole method really just boils down to 4 simple concepts. First, you look at a moving average of your sales. This smooths out the random ups and downs and shows you the real demand. Second, you check the trend. Are sales generally heading up, down, or are they flat? Third, you flag for seasonality. Do things go crazy around the holidays? And finally, you put every single item into a risk bucket. It's like a traffic light for your inventory. Green means go, buy more. Yellow, hold on a sec. And red, whoa, stop. It's time to sell this stuff off now. Okay, theory's great and all, but what does this actually look like in the real world? Let's walk through a little case study. It's a simulation, but it's based on very real patterns we see all the time, just to show you the kind of impact this can have. I mean, just look at these numbers. The results really do speak for themselves. Before this disciplined approach, 28% of the stock was basically dead weight. Inventory turnover, a sluggish 3.6. But after just 3 buying cycles using these simple spreadsheet rules, bam, dead stock dropped by almost a third, and turnover jumped to a much healthier 4.1. But let's translate that into what really matters, cash. In this model, there was about $120,000 tied up in stock that just wasn't moving. By making smarter decisions, between $14,000 and $18,000 of that cash was freed up. That is real money, back in your bank account, ready to be put to work on marketing, hiring, or whatever you need. And this, right here, is maybe the most important takeaway of all. The huge improvement didn't come from some magic algorithm or a pricey new platform. The win came from empowering people to make consistently better data-informed decisions. It's about making you smarter, not replacing you with a machine. Okay, so you're probably thinking, This sounds great, but how do I actually do it in my business? We've got you covered. We've boiled this whole process down into a repeatable, 5-step playbook that you can literally start using tomorrow. Well, here's your roadmap. It's 5 simple steps. First, audit your data. Figure out where the cash gets stuck and pull everything into one clean spreadsheet. Second, forecast using simple moving averages. You're looking for a realistic range, not a perfect prediction. Third, compare that forecast to your capacity, what you can actually hold in stock, or how many seats you have. Fourth, and this one is key, set simple rules to take the emotion out of it. Like, if an item hasn't sold in 90 days, we put it on sale, period. And finally, step 5, don't even think about buying fancy software until you've already proven this simple method works and delivers a return. So, at the end of the day, the answers you're looking for, they're already there. They're sitting in your sales reports right now, waiting for you. The technology is not the problem. The real challenge, and honestly, the real opportunity, is to start asking the right questions of the data you already have.